Hi, it's Kathy Hee from John R. Wood Properties. I'm here today with Mary Adams, Senior Loan Officer from New Res in Naples, Florida.
Hi, I'm Mary Adams. I'm with the Southwest Florida Mortgage Group with New Res here in Naples, Florida. And I have been in the mortgage business since 1993. I was formerly Senior Sales Manager for a Fortune 500 bank. And that was before I came to work with our Southwest Florida Mortgage Group in 2007.
What are the two key factors New Res looks at in an attempt to approve home buyers for the type and amount of mortgage they want?
Key factors, the most important factor they look at before they look at anything is your credit score. You have to have a credit score that meets the minimum for loan qualification. That can vary. So right now, generally for conventional financing or FHA financing, the minimum score is about 580. But right now, or in times during economic uncertainty, right now during COVID, which clearly is a time of economic uncertainty, the minimum scores do raise up quite a bit. So right now, the minimum credit score for qualification is most likely anywhere between 600 to 640, depending on the loan product and what you're looking to do, be it with down payment and that kind of thing. Property types as well. That is the first thing they look at. The second thing they look at is, again, your ability to repay, and that is going to be based on your income. They want to make sure that your income is steady, that you have a history of employment in the same line of work for at least 2 years, and if you're salaried, that's good. If you make income through commissions or bonus income, you have to have a 2-year history of receiving that type of income before the lender will be able to consider that as a steady source of income. And one other thing is the income that we're using for loan qualification has to be expected to continue for at least 3 years. So for instance, if we're using child support and the child is 17 years old, that support will most likely end when they're 18, so we can't use that income unless it's expected to last for at least 3 years from the date of closing. So that's another important key factor on income, and that income is going to be in relationship with your debt. Conventional financing guidelines, which we all underwrite to Fannie Mae, Freddie Mac, or FHA, VA, depending on what the loan type is, they will take all of your debt, so that includes your car payments, minimum payments on credit cards, any real estate that you own, including the taxes, insurance, HOA fees if applicable. They're going to take all of that debt and combine it with the subject property debt, the property that you're purchasing, and they're going to come up with a calculation called a debt to income ratio. And that debt to income ratio really cannot exceed anywhere from between 43% to 55%, again, depending on the loan product you're going with, the property type that you're purchasing, how much you're putting down. Again, there's a lot of factors that go into that, but again, that's why getting pre-approved in advance is so important. The other thing they look at is where is your down payment coming from? Your down payment funds need to come from an acceptable source. An example of not an acceptable source would be, believe it or not, if you have $50,000 cash in a safe at home and you plan on using that for your down payment, that's not going to work. And we are not able to source those funds, and we have to, in accordance with the U.S. Patriot Act as well as standard federal lending guidelines, we have to be able to determine where the source of those funds. A big reason for that is because they want to make sure that the funds were not borrowed from a source and you have an additional liability that we're not aware of. That's one thing. Also, again, as I mentioned, in accordance with the U.S. Patriot Act, we are required to document the source of funds that are used in a real estate transaction. Another form of source of down payment that would not be acceptable is if you borrowed the funds via an unsecured loan. So let's say that you took out a line of credit with no collateral, it was an uncollateralized line of credit for your down payment. That is not an acceptable source of down payment. Income, credit, source of down payment, and oftentimes reserves. Depending on the loan type, sometimes there are required reserves. That generally is more important if you're buying an investment property, a second home, or if you're getting a jumbo loan.
Please feel free to contact Mary Adams at New Res today to discuss your particular mortgage needs, or apply online and Mary will promptly get back to you. She is also happy to provide you with her customer references.
Best way to contact me is, my phone number is area code 239-298-5333. My email address is madams@newrez.com, or just Google Mary Adams at NewRez, Mary Adams Mortgage Naples. You'll find me.
I want to thank Mary for the wealth of knowledge she has shared with us today. Thank you, Mary, very much for the time that you have spent. It has been extremely informational. And as always, everyone, enjoy today. Thank you.